Hey, welcome everybody. This is the Options Moneymaker Q&A session. Today is October 21st, 2020. It's 7 p.m. Eastern. I'm Mark Dannenberg, and Aaron Rumley and Michael Kastner will be with me this evening also.
Hello.
Hey, Mark.
All right, we're going to go ahead and get started here. The purpose of these Q&A sessions that we do every 2 weeks is because we are very committed to helping you learn how to trade. I think any process of learning how to trade, any process of a trader becoming a trader involves learning to trade before they trade to earn. Now, we always promote trading in sim mode. We promote trading in a paper account before you trade live, because it's a way for you to get started and get acquainted with what you're doing and test your understanding. So the types of questions that we may encounter during the Q&A have to do with the adaptive entry system that we use for identifying trends. It is absolutely an outstanding system that was developed by New Cycle Trading and Analytics. And it's a very, very simple approach to helping traders understand what the very immediate probability of a move is and in which direction. The Profit Sweet Spot Matrix that we use for tracking the daily Cycle Founder Plus crosses, the live trading room, which is something that is just a core part of Options Moneymaker. And we discuss the adaptive entry system in there all day long. We discuss how to trade futures properly. It's really a real-time trading and support environment for any trader who wants to immerse themselves in trading. We trade both futures and options here at Options Moneymaker. We primarily focus on futures in the live trading room during the day, but people have questions about options trading. We are happy to answer those questions. The beauty of the adaptive entry system is that it is effective with both options trading as well as futures trading. So the first part of the live trading room session is focused on a review of a watch list of stocks and indexes that we're looking at for possible options education, options trades. And then right at market open at 9:30 Eastern, Aaron will identify any valid trades from our watch list of stocks that are designed for options traders. And then the rest of the day, we're primarily focused on futures. But again, anybody who wants us to identify or provide some information to them on options and some education on what to do with an options trade, we're happy to do that. And as I mentioned, New Cycle Trading and Analytics, we have a very close collaborative partnership with New Cycle Trading, and they've just been awesome to work with in developing the adaptive entry system. So any questions that you may have about any of those topics or other topics that revolve around areas that we cover in our curriculums. Okay, so if you've been in our live trading room or if you've listened in on the end of day reviews that I do of the performance for the adaptive entry system that day, then you know that I strongly encourage everybody to update their personal trading plan at the end of the day. Now, usually we do our own updates at the end of the day. We do it in a recorded session so that everybody can kind of follow along and understand the importance of it, but also how that personal trading plan is helping you see what your income could be over the course of a 12-month period. So the last 2 days, I did not do that at the end of the day. So we're going to do that here. So first thing I'm going to do is I'm going to pull up our tracking spreadsheet. So I'm going to be looking at Tuesday the 20th and Wednesday the 21st. And we have 2 categories that we log our information, trading performance, into a personal trading plan just to show you different variations of how this adaptive entry system works. It's the exact same tool, the adaptive entry system, but you may choose to trade a limited number of hours. You may choose to trade a more expanded number of hours. You may choose to trade all of the signals, some of the signals. So we've kind of carved out two different scenarios, and our carving out of those scenarios is not intended to suggest that you're limited to only those two choices. We're tracking 9:30 to 12 o'clock, taking all signals, and we're tracking 7 a.m. to 4 p.m., taking just trend bias and trend continuation signals. And this is referencing trading the NASDAQ 100 futures and using a 5-minute chart. So we track those because we're showing you what a longer time commitment to trading is during the day using only two signals versus a shorter time commitment during the day using all of the signals. And then this program where we track, thanks to Aaron, has been designed in such a way that we can take a look at our averages and see what the average performance is in any combination of categories that we choose. So in this researching line, for example, we could choose a different set of time frames, and we could evaluate 9:30 to 4 instead of 7 to 4, or we could evaluate 7 to 10. We can evaluate whatever combination of start time and end time we choose, and we can use any start time and end time and look at it relative to trading all of the signals plus fractals, trend bias only, fractals only. So it's a very powerful way for us to help any trader who has maybe a more limited commitment of time to understand what they could expect from their time commitment to trading. If you have 2 hours a day, let us help you in the live trading room, or here tonight in the Q&A. Let us help you understand what you could reasonably expect in terms of performance during that period of time. Our performance information is based on the last 92 days of trading. Now there's 20 trading days in a month. So we're approaching 5 months of data that we have. And why is it only 5 months? It's because that's when we started using this particular tool and profiling the personal trading plan at the end of every day. All right, so we're going to jump back to our daily summary. And we're looking in the 9:30 to noon category and 7 to 4. Yesterday, we managed to do 35 points of profit. Each point on the NASDAQ 100 futures is worth $20. So that's 35 points. Today, we did 60 points. It's been a really good few days here. We had a losing day last week on Friday, but it's really been a good couple of weeks here. And I'm going to show you how that is going to fit into a personal trading plan and show you a 12-month income. In our 7 to 4 category, yesterday we did 95 points. That's a really strong day, 95 points. That's, again, $20 a point. And today we did 80 points at $20 a point. And again, you can scroll back and you can take a look at all of the prior days. We've had some losing days, 1 point, 4.25 points, 14 points, pretty small losing days. Had a bigger losing day back here, 71.5 points. I remember getting some questions about that. You know, is the system not working anymore? What happened today? Well, the nature of the market is that some days are going to be underperforming days, and then you're going to have a whole bunch of days that are going to be performing just the way you want to see them. So the most important thing for us is to take that information and plug it every day into a personal trading plan. So I'm going to start with a 9:30 to noon category, and I'm going to go over to our data entry field here. And we did 35 points, and we're trading 3 contracts. So 35, so you would take 35 times $20 a point times 3 contracts, and we're going to put in $2,100. That was our profit for the day in that category. We did 13 trades, and at 3 contracts per trade, that's 39 contracts. So that takes into account the cost of commissions, the expense of basically being a trader and trading. And then today we did 60 points. So $20 a point, 3 contracts was $3,600. And then we did 9 trades, and so that's 27 contracts. Okay, so I'm going to put in the other data here in the other category, and then we're going to talk about what the forecast is. In the 7-4 trend bias and continuation trade, yesterday was 95 points. That's just outstanding. And that's $20 a point, 3 contracts, so that's $5,700. And we did 19 trades, so 19 trades at 3 contracts per trade is 57 contracts. See how simple this data is to put in, but it's so critical that you do it every day. And today we did 80 points at $20 a point for $4,800. And we did 15 trades, 3 contracts per trade, so that's 45 contracts. Okay, so I'm going to start with our 9:30 to noon. That's our shortened window of trading time. First thing I look at after I plug in the data is right up here. Now, our 52-week trading plan is 15.5 weeks in, 15.6 weeks in. Of those 15.6 weeks, we've had 26 losing days. Now we keep track of the losing days because by default, every other day is a winning day. And we want to know what our loss run rate is relative to the number of weeks that we have behind us. Then these two calculations are going to help us understand what the average point value is for each winning day. And this one is what the average point value is for each losing day. The frequency of losses relative to the number of weeks is factored into those averages. So we can then use these averages as an established run rate. We know that for the first 15.6 weeks of a 52-week plan, we have run successfully at these rates. So we want to then forecast out the remaining balance of our 52-week plan at those same run rates because it takes into account the loss run rate, takes into account the averages, average performance of our winning days and average performance of our losing days. So in these two fields right here, it's important that we translate the run rate, 23.43, into our forecast. And minus 36.76. Okay, so now what we have done is we've married our future forecast for the balance of the 52 weeks to the actual run rate. That right there is going to tell you what you can potentially earn over the course of a 12-month period. Now, these numbers are going to change a little bit from day to day, week to week, because your overall performance may improve, your overall performance may decline a little bit, but bottom line is you're going to keep your eye on the target, whatever your target is. The target right now, if we assume the same run rate for the balance of 52 weeks that we've established for the first 15.6 weeks, is that you could have $170,937 income. Now you could. Now there's variables in there that you're going to see from day to day, but the further into your 52-week plan, the less likely it is that you're going to have significant variations in these numbers from your run rate to your forecast. Now, this $170,000 forecast is based on trading no more than 3 contracts. And the personal trading plan is designed and built for limiting your risk. And the way it limits risk is we have started this account with $5,000. So $170,000 is pretty reasonable income off of $5,000. And the first level of risk limitation, and there are 2, but the first level of risk limitation is we will not open more contracts than the margin requirement is 10%, more than 10% of the balance of the account. So let me say that a little differently. I think I might have said it a little confusingly. We look at what 10% of the balance of the account is. Then we look at what the number of contracts is and how much margin is required to trade that number of contracts. So with Infinity Futures, where we trade, each contract requires $500 of margin. In order to trade 3 contracts, that requires $1,500 of margin. That means that if we're going to stay under 10% of the balance of the account, we need more than $15,000 in the account balance. 15,000 times 10%, 1,500, so we can trade 1, 2, or 3 contracts with that balance. Second risk limitation is you, as you get more and more experience and being comfortable with your trading, deciding how many contracts you want to limit your exposure to. If I took this 3 max out, let me just delete that for a minute. You will see that your, that's incorrect, sorry. I'm going to go to 1. No, sorry, I meant to go the other way. Let's just say I put that at 30 max. Well, it'll grow up to 30 contracts. And you might not be comfortable trading 30 contracts. Let's say I put 50 contracts in there, and 50 might not be practical. You might not be comfortable trading 50, but it's going to grow up to whatever number you put here as a limited number of contracts. But before you would ever get to that, before it would ever scale up to 50 contracts or 35 or 20, you have to first of all have enough balance in the account so that that margin requirement is no more than 10% of the balance of the account. So I don't think 50 is practical. I think 3 is very practical. I think 5 is practical. That depends on your own experience level and your comfort level with your current run rate. So I'm going to leave these at 3, and you can see that the $5,000 starting balance has a potential of growing to $171,000 over the course of 12 months. All right, same thing on our 7 to 4 category, trading trend bias and continuation trades only. We've had 17 losing days in 15.6 weeks. That gives us a positive winning day run rate of 35.52 and a losing day run rate of 23.55. So we're going to adjust these 35.52 so that they line up perfectly with the run rate. These are the forecast numbers minus 23.55. Okay, so using the same numbers that we have as our average run rate to determine our go forward forecast based on having 17 losing days every 15.5 weeks. Now these numbers can change a little bit, but you're going to update your trading plan every day, so you're going to keep it current. Keeping our maximum contracts to no more than 3, that gives us a $362,834 potential income, having started with $5,000. If you decide that you are very comfortable with your trading and you're comfortable trading more than 1, 2, or 3 contracts, you could increase that to 5. You could increase it to whatever you desire, because you know that the plan will not increase, it will not increment or scale you up to a higher number of contracts until the balance is sufficient so that your margin requirement on that number of contracts will be no more than 10% of the balance of the account. So the 2 limitations of risk are designed for your protection. This one variable is designed for you as a trading business owner to be able to increase your income if you're comfortable with your trading, maybe even be ultra conservative, drop it to 2 contracts, and you can still make $276,000 potentially, having started with $5,000. Bottom line for me is, any way you slice it, the personal trading plan is an absolute must for you to keep your eye on whatever your run rate performance is driving for a full 12-month period.